bit of a different day, you might say, for these markets, not altogether clawing back the losses that we'd seen even here in Asia. But still, do you think markets are right to kind of take a step back, evaluate what's going on, and ultimately, do you see this as a buying opportunity?
Well, I think it's an opportunity to accumulate. May not be an outright buy, because we've seen a lot of volatility. I mean, if you look at Dow futures yesterday night, it was swinging from negative to positive, and similarly for the Dow, I think that's going to be the story for the next couple of weeks. So I think there could still be the possibility markets may hit a bit further south from where it is right now. Bond yields, long bond yields have headed higher towards a 2.8% handle. Our view is that eventually in the next 12 months, bond yields will head towards 3.25%. So I think the markets are recalibrating expectations, repricing inflation, interest rate risk. It's not over. It's still in the process of taking place. And what you see as a byproduct of that is a lot of volatility. And that volatility can create opportunities. So I wouldn't throw all my money in right now. I would accumulate and spread it out over the next weeks or perhaps even a couple of months.
Do you agree with Carl Icahn, though, that some of these inverse volatility indices that we've been tracking, taking a big hit as this period of complacency, if you will, seems to be coming to an end in some ways? Do you think they are dangerous? I
think they are. I mean, at the end of the day, markets have just assumed that markets have been very complacent. Markets have underpriced risk. Volatility has been very low. I think we are now at an inflection point. We're going to see a lot more choppiness in the markets going forward. Inflation risk is going to pick up. Interest rate risk is going to pick up. Geopolitical risk is going to pick up. In that sort of environment, I think leverage may not be the best way to go.
But leverage relative to what we saw in the financial crisis is still in a very different place, is it not?
It is in that sense. I mean, you don't have over leverage, but nevertheless, I think you still have investors who want to buy products based on leverage, and interest rates are very, very low, and that era is gone. I think going forward, things are going to change quite dramatically.
Have you received any questions from clients about these inverse volatility products at all? Is there a level of nervousness out there? Are you at all nervous? Because we understand it's quite difficult to identify how much exposure there is and exactly who is exposed.
We don't have clients asking too many questions about things like this because it's not something that we talk about on a regular basis. We tend to go for more traditional, plain vanilla products as opposed to products that have got a lot of leverage embedded. We think there are enough opportunities elsewhere in the universe, instead of looking at something like that.